Good morning, everybody. Hope your evening went well. We got about an inch of snow overnight, into the mid-30s today, the 40s tomorrow, and 50s by the weekend. So the wind will be blowing up from Mexico and Texas, bringing some warmth back to the southern central plains. And it's been pretty darn cold. I don't think it's been as cold as it has been east of the Mississippi or the Dakotas, Minnesota, northern Illinois, but cold enough. Okay, today I think it's one of those days where we might get a better feel for the stock market and what the Fed support's going to be. The euro is lower, crude is poised to go lower, copper is lower. They stopped trading in London on the LME, I believe, on the copper. The Australian dollar is really, really well down. The German court opened the way for the ECB's QE1 to buy sovereign debt. So there's a lot of things taken. The ruble's down. Freudian slip right there, ruble. But I always thought it was a pretty interesting and apt comparison or play on words with the ruble. And our financials are pointed higher. Yesterday's 10-year auction got off at 29.2.5. And it certainly looks like this auction will go higher. So the bottom of value, basically, we've got high volume at 12. We've got the bottom of value at 11. We have the overnight session low at 6.5. So we know we've got really, really good support at 4 to 8. We may have it at 12. So the buy, which is very, very aggressive, is this 8 to 12 area. Let them get stops below 12. I'd like to get it done against 8 if possible, but a lot of times that's not in the cards. And buy 2 will be against the buck. And what we face right off the bat at 8:30 Eastern is retail sales. If as forecast, it would be supportive for the financials. X autos at -1/10 also. With Econo Day. Now I've seen +1/10 to +2/10 on Forex. So we have split forecasts, but Econo Day, which is the one that we follow, which has been a little more consistent, is carrying negative numbers. Export prices reflecting deflation, -0.5. Import prices reflecting deflation, -2.7. Business inventories at +0.3. That would be supportive of modest to moderate economic growth. Crude inventories, 12 million. Just what the industry needs is a positive growth in crude inventories, which is really possible given the increased pumping in the United States and in the Beige Book. And that will be looked at to see how the Fed feels about their modest to moderate economic growth forecasts in all 12 regions of the United States. So the number one news focus will be the E-minis reaction to retail sales ex auto, then to the 30-year, then to the Beige Book after the auction. The sells 19 to 23. I like the long side of the market. I can sell failure to take out basically 20 to 24, and then 27 to 31 for sell too. So we do have news to get through, and the news can bring a reaction. If off of forecast, the forecast as it stands right now is bullish for financials. So the trade that has the most potential is shorting in front of the news, and just in case, because the bullish number is built into the news. Okay, the knob spread held in overnight, but there was more put buying yesterday in both the 30-year and the 10-year, and there was some profit taking in calls. So we're at the high end, and this is what the industry does. They cover their bets with puts. That way they've got a fixed dollar amount in their hedge, and they don't lock it in. It reflects their bullish bias, but with the news, you never know. So, I mean, here we are. Resistance is 4.8. So, failure to take out 4 to 8 is the easiest trade to see, and then we'll open it up 15 to 19 for sell too. Really a very, very strong market. On the buy side, at the buck, so 20 to 24 is support, so we'll make 25 to 21 buy 1, and then 13 to 17 for buy 2. Now, we haven't had a lot of trouble getting to our number 2 levels because of the extra volatility on this contract. We do have trouble usually getting to our number 2 spot on the 10-year, so just keep in mind that our second levels usually, with a little bit of patience, are reachable on this particular contract. If the number 1 levels hold on this, we've got a strong or a weak market as per the analysis. The 21 to 25 is pretty aggressive. 13 to 17 is not. On the buy side, I do like the buy side better. Okay, the big thing impacting gold right now is deflation. Crude oil prices, copper prices, the inflation numbers coming in are pretty friendly for inflation. That's bad for gold. A sovereign debt or a banking surprise based on, could be on loans made against commodities, and that's very, very popular in Asia. Remember, we've had a couple of scandals where there really wasn't copper in the warehouse, there really wasn't iron ore, etc., for loans made by Chinese banks. The Bank of China has had to come in and do some shoring up financially because of that. China has also announced that they're going to do $1 trillion worth of infrastructure. They've got 300 projects, large projects that use cement, steel, construction. So at some point that probably will come in and support those raw commodity prices, but not today. So gold deflation takes gold prices lower, financial scares, surprises, sovereign debt misses, debt repayment misses, take it higher, and that's where we are right now. Okay, so 35, 37 is sell 1, basically leaning against that, and then our 40, 42 is sell 2, pretty much where we were last night. On the buy side, we like the 25, 27, we'll keep it there. And then our 20 number plus or minus. 35 to 37 is pretty aggressive, but it is where resistance is right now. Okay, the euro is poised to trade lower, and with the ruling in the German court yesterday approving, basically giving the green light to QE1, the euro did trade lower. And we found a buyer below 50. So we had a 1740 to 50 and then a 1775 last night. So that's where we are right now. So we rejected prices below 40, so we'll make 30 to 40 buy 1. And then we'll make 17 even, 1710 buy 2. The idea that it might come lower based on a better than forecast retail sales number. On the sell side, we've got volume, so we'll make 75 to 85, sell 1. We're right in the middle. That's a directional call. That's a much tougher trade than our 18 to 1810 for sell 2, which is at the top of value. So 1750 is the bottom of value. Basically, 18 is the top of value. You got a structural advantage selling the 118 at level. You got a structural advantage buying 117.5 or better. 75 to 85 is a crude oil. Again, everybody knows that your majors in the rest of the world can do quite well at 40 to 50 bucks a barrel. Your frackers can't. Your conversion of coal to gasoline, your ethanol, and the rest of them can't. They need higher prices to make it work. So you have the cost of bringing crude oil production online, and with really, really good big targets, being allowed to drill for them, will bring in support somewhere in this $40 range, in my opinion. Now, markets always get excited and they go too far, and that can be the case here, as we've seen. So this 40 to 50 area, Saudi Arabia has said 40 bucks was a price that we could see. No reason to doubt their word. They're planning on it. They have telegraphed their intentions. And so if we go below 40, markets always overrun their trading targets. And they always spend more time higher than you think they should, and they always spend more time lower than you think they should. It's just the nature of the beast. So we're basically selling 46, 46.50. And on the buy side, we're buying 45, the 45 area plus or minus. Okay, the E-mini, it is poised to trade lower. We're going to watch the 50-lot trader today to see if they're buffering the selling. We had talked a couple days ago about the 95, 97 area. Let's go back and look at the F1 screen to bring some perspective into it. So we had this area right here, this little high volume area in this 95, 97. We've got a low volume number in the 80 area. We've got this low at 83. So 95, 97, if we get through that, then probably 80, 85 for our number 2 support level, and all the way back down to our 60 to 70 area. 60 to 70. Got an attractor right here at 67. Got 80 to 85 on this screen, and then 95, 97. You have to maintain perspective. If you're watching a 1-minute chart, you have absolutely no perspective on. You have no context. You have nothing. They're great for execution, but not much more than that. They will put you very close to the market's edge. If you're right about that being the market's edge, a moving average crossover on a 1-minute chart is pretty powerful. It will gain you trade location. Okay, this is support, 95 to 97. So getting stops beneath that, that's buy 1. And buy 2 will be 90, 92. I like the short side of the market better based on this morning's news, but some of that is built in. So if we get retail sales numbers that come in at minus a tenth and the market doesn't break, somebody's going to cover their shorts. So the most potential is to the upside. Okay, last rotate up stopped at 7, then a 10, then a 13. So this 10 area plus or minus would be sell 1 and then sell 2 to 16. Now, having said that, we've got this 7 and we're at 02. So this 5 to 7 area might be all that we get, but we're going to have a news swing. So you want to take advantage of retail sales and what it does to the market. You got to position before that news hits. And that is fraught with risk. It increases the risk. But they've run the market down into this news. Some negative news is built into the expectations. if you want to take a trade, the trade that has the most potential because they've run it down would be a long based on the news coming in as expected to maybe a little better than expected. There are a couple of forecasts out there that are showing plus 1/10 for retail sales, plus 2/10 ex auto. So it'll take about 20 minutes to get everything up and posted. I'm going to get busy on that. I'll be back with you as soon as possible on the news anyway. Later.